What's up, everybody? Good morning. Good morning. Good morning, future millionaires. I love that. That's cool. You're hyping me up. All right, to get started. I'm ready to make some money today. That's it. Good morning, fellow warriors. What's up, friends? What's up, guys? Good morning. All right, we've had a very interesting recovery over the overnight after we had NVIDIA earnings at the end of the day yesterday. The S&P is playing right into my hands, exactly what I want to see happen. Super excited about that. So, y'all ready to get started? What's up, friends? Don't forget to smash that like button over there on YouTube. Welcome to the show. Best damn future trading show on the planet. Better than your paper pushing gurus out there. Real trader, full transparency here. Draw what I want to see on the chart. We'll see if it happens to me when I trade. It's fully transparent. You guys, thanks for tuning in. We love you. I think I'm going to go ahead. I miss having music. I know it's quiet, but I'm going to turn it down really low just so it's not so like crazy. Market opens in 3 minutes. Upper DD band on the S&P. Let's just jump right into it. I don't know what that is, but let's leave that. Old yellow line from yesterday here. We're kind of sitting. Let's get our dynamics on the chart. We draw these. This is from the bot in the Discord. Don't forget to go to Discord. Grab this. This is from the Rocket Tutor Future Dynamic bot that we have. 5607, 5502, 5607. $55.92. 55.57. Nice and bullish again. Above the blue is very bullish, as you can see. Let's get the Nasdaq numbers here. MHP on the Nasdaq side, 394. Support pivot right there. Perfect. 476, 291. That did count video is going to be super. Oh, 100%. 100%. 476. Okay, so let me look in right here. So the 29th. All right. Let's do QQQ. Okay, so we pan out here. Let's get the resilience on the chart. Friends on YouTube, don't forget to smash the like button. Let's go. It's right out the door. It's your QQ liquidity map. We are right here on hedge pressure. I always take a little bit of a tiny little long at hedge pressure and monthly. So let me get my pencil tool here. Where go? All right, where did oh, there it is. Okay. All right. We have Nasdaq over here. Outside of DD bands. Okay, let's look at QQQ. So irrational side of DD bands, I'm always going to trade small when I see that. QQQ, we have that bull long up, which is from here. There is really no upper target other than to try to fill that gap that we saw. It's going to decay out some of that NVIDIA. So this is a push up, but the thing is that there's really not an easy position with the exception of the S&P filling the gap. So upside target, betting small, off hedge pressure typically is what I always will do. From here to here over the next couple of days is what's likely possible. So just for funsies, oh, that resilience is super negative. Wow, this is likely going to come down if that's the case. All right, so so let's take a look at organize here. What is going on with my computer? On Schlinky Schlink. Let's take it. Just one contract to the long side. I'm going to chase the breakout. Always chase it small if I have one. Friends on YouTube, don't forget to smash that like button. Let's go. Good morning. What's up, David? Good morning, everybody. What's up, chat? That stupid decay on NVIDIA. Oh, yeah, 100%. All right. Let me get everything situated over here. So there's basically a bull setup, but there's really no upper target except for filling some of the gaps on the SPY. Nasdaq, the upper gaps here. We are outside of DD band, so markets to be particularly random. And Nasdaq just flying straight up to fill that NVIDIA run. Kind of like undo what happened in earnings is pretty decent. All right, so on YouTube, you'll be able to see the top. I'm going to show you guys really quick. You've got a 560 support to here. This is like a 2 or 3 day move if that still persists. This is likely to go, if it keeps going, gap fill, wherever that would be, and I'll pull that up in a second. VIX is in a decay pattern, so again, everything's structured bullish today. Not too terrible. VIX is breaking through hedge pressure, so that's pretty decent for the bigger run. VIX like this is going to support like a lack of selling off in the market. And the IWM here is looking pretty solid for a sell-off. So you got like a lot of rotation from Russell been selling this way. And then that, people covering that Nasdaq target. So I just have a tiny little, like I said, hedge pressure bounce long at the open. God damn it, come on. Oh, this is what it's doing. I'm playing with my Weeble settings here. Trying to get these things. Alright. So I just got a 1 contract long, just a tiny little one. If I lose hedge pressure, then I lose it. So let's talk about the greater market here. I'm just trying to get myself situated. This is what I see. We're going to talk about what I do see going forward. Good morning, friends. What's up? Friends, YouTube, hit that like button. Let's go. All you guys here, you got to give the stream some love. All right. Woo, baby. Okay. Okay, so I drew this a couple weeks ago. And I think that we end up having a roll like this. Okay. I really just think we get a little bit of a leg down before we keep going higher. Now, there's no reason for this other than the VIX is in a state of possible elevation. We have the September triple B, so this is the thing to take note of today. If the VIX is down below the 1605 level, this is good for the month. So this is like one of those happy months, good for the month. Good for bulls. So VIX pushing above here creates a potential higher volatility environment, and VIX crashing below here or collapsing below here is good for a nice solid bull run up. So we're still kind of on that cusp here. This is pretty decent for the bull side, which is why there's like a teeny little long trade. But this back above here for any particular capacity is going to be a little more volatile for the month, which means bull markets aren't going to move as easily. It's going to be a lot choppier, et cetera, et cetera. There's that Nasdaq pushing up really higher. The gap fill in the SPY is 564.87. It almost makes sense that it will likely want to fill the gap. Yeah, I took the BLU long out the gate with just with 1 contract. Like I said, I always trade small. But I still think that despite all of that, hold on 1 second. Let me get my prediction here. Now, this is one of the many predictions I've come up with, or things that are going to happen. I think either in the short term or the long term doesn't matter. I drew this last week that we would either fill the gap and top off, and then we'll have some waves down before we end up rallying. I think the rally won't come until about December. The market has a really interesting setup here. I told you yesterday, I said secrets in the secrets out. I'm buying some. I'm looking for short-term puts. So I am looking for the market to retrace a certain distance at least between now and the end of the month, and then I'm going to be buying calls, buying calls, buying calls. I don't know if I want to be so specific to try to buy the short waves down, but I'm actually, you hear me fooling around with Weeble. I'm actually shopping for puts right now, and that's the first thing I said. We're shorting this. I'll let you know how it plays out whenever I get my options. So I'm just trying to get all the, like, I haven't since I reformatted my computer or reinstalled Windows. I had to delete everything and start over. So here, again, like I said, just $500. If I'm wrong, that's okay. I bought right at hedge pressure. Which were you thinking more of, QQQ or SPY? QQQ 100%. That's where the volatility is. So with resilience being negative on the S&P, I'm not really liking the idea that hedge pressure is going to hold. So resilience often can predict a hedge pressure break. So what I'm going to do, I always try to bet that we're going to be bullish, and a lot of times resilience can scare me out of the trade. Resilience is a gap fill predictor, and let me show you on the cheat sheet. I might actually close this out. Unless the resilience starts to move. Let me double check Nasdaq really quick. Nasdaq also negative. Oh boy. Oh boy. Let me close it out. We have a video called Resilience Can Predict Hedge Pressure Break. It's one of the few times I actually just trim my position and walk away if I don't like what I see. I'll try again one more time if resilience does go positive. But if you look at this on the cheat sheet, you guys, resilience is an indicator that shows at half gap. Negative resilience, it tends to fill the gap this way, which can force a hedge pressure break, which means it could fall pretty far if it happens. So resilience is the desire for price to fill the gap this way. And because of that, it can break hedge pressure and fall pretty rapidly. With the idea that VIX is on the cusp, I wouldn't weed that out, but taking my tiny little bull long up from here, it could have been the right trade, but let me go ahead and stay on the sideline of this. I'm not going to short this either. I'm going to let it play out. But today, you guys know my favorite trade's always bull zone, so there's really not much from here to do that on. So I think we might be coming down today, to be honest, if that resilience number doesn't get better. So let's put up some retracement levels off of today's move. Better safe than sorry on this one. You know, outside of DD band, it's not really too. I'm not really too eager to like chase this. Let's get some red lines on this one. Show you guys a trick. If you guys know the illiquidity pivots trick, call them red lines. Okay, so let me show you how this works. We're gonna go to tick chart. So number one is outside of DD bands, I usually don't trade. Heavily at all. I trade light. Oh, so yesterday, by the way, if you guys missed yesterday's course, we made a modification to the liquidity map. And I'm going to ask all of you guys, if you're part of the crew here, there's a new liquidity map, and we're not releasing it for a while until we finish this course series and maybe months later. But I took the old liquidity map. Okay. I'm not gonna, so this is a present for people that are supporting the new drive that we're doing. So if you go to cheat sheets and you go to liquidity map, I finally have made this for the first time ever, is the liquidity map with each leg on there, which one I take and how big I trade on each one of them. They're all different. And so the new liquidity map will have guides on here that show how much I trade small, trade big, trade whatever. And so if you guys want, go to the Discord and go to the announcements there and look for all the information that shows how to get in. This is only 20 bucks, $1 a day. You can support this. We're going to hire 2 new developers to build the platform, and we're going to automate this in the platform for everybody after we raise the money to do that. So we'll have probabilities on each of these arrows, as well as the amount I trade on each one. If you guys like that, we'd love your support. Okay, so let me just get over this really quick. Put this over here to the side. So the new liquidity map. All right, so illiquidity pivots. We got to do red lines really quick. So let me go here. Tick chart. 233 tick. All right. Let me show you what to look for. I got so good at these, I can just see them without having to do anything. All right. I've been doing this for too long. That one's dead, and that one's dead, and here we go. So these are pivots today, 5607, 5641. We're going to go all the way back to here. Make sure we draw those on there. Oh, that's actually right on. 607. And then 5641. Oh, that's right. That's right. The yellow line too, huh? Wait a minute. Oh, 50, sorry. 5607, 5584. Okay. 5584. I was like, that sounds like the yellow line number. 5584. Okay. See, I closed my trade early. It was only just kind of giving me some funkiness here. But it's still kind of like, okay, why am I doing that? Let's do Nasdaq really quick. Now, again, that was the long trade I was going to take. I bailed early on it just because I didn't want to sit with it. VIX, IWM. Let's repeat this in Nasdaq. Russell's continuing to pull back. Nasdaq does have a yellow line right here. That's probably the interaction point today. Questions going to be as going to be Matt. If it did break up, how would you spot the exhaustion candle? It's like big volume spike, but little candle near the target. Typically, exhaustion candle is a big volume spike. And then once the volume decays, you're underneath one of your key pivots. Okay. That one's still forming there, so just leave that one alone. So we'll see if a possible yellow line on this. All right. Get the risk interval really quick. Go to the table. Nasdaq. 144.25. My DD bands in there. In the long run, the liquidity map doesn't work if you backtest it. Yes, it does. Dude, I've been using it for years, bro. It's top 5 in the Robins. I've done all kind of stuff. So I've been on a 75-day win streak on YouTube. If it doesn't work, it's because you don't work. Trading is not about indicators. Trading is about how you bet. We talk about this all the time. You just don't bet properly. Of anybody that trades on YouTube that you watch, take your 2 favorite traders. I do better than both of them put together, and I'm usually very modest about that. I'll do a lot of marketing about that. Just watch. You guys watch me. I'm gonna take my, like I said, I'm gonna make on my options trades using only the maps. Bull zone bottom bounce has, under the best conditions, has all lights green and yellow. Bull zone bounce has almost a 90% chance of happening. So BSU right here, under most moderate conditions, 60 to 70% chance this happens. This is one of my favorite trades. So this trade right here, any hedge pressure breaks to the upside, they're ridiculously high probability. So, bro, I'll tell you, there's nobody out there that will day trade against me. I've challenged people for years. I'm probably one of the only people on YouTube that even trades a real account, to be honest. Oh, you're here to tell somebody if you have somebody that you're talking about. Listen and see what everybody in chat is saying. They've been using it for years, so trust me. It's just you. If you're not actually trading by betting properly, then you're not going to be doing well as a trader. Okay, so speaking of the maps, right here, the monthly maps, resistance levels in the S&P still, QQQ still. This is supporting that right there. We're going to have resistance going into September, October. This is not going away. This is going to be a hard realm to pass through. I'll tell you a little humble flex. How much, I'm gonna ask you, OG, how much do you think it costs to build a trading platform? I'll just ask you. What do you think? I'll give you a gentle flex. Here's Nvidia. Even though we moved up in Nvidia, it's still got bear zone in front of it. You see this after yesterday? Nvidia is looking just like QQQ. It's got some hard resistance to break through. Oops, it's fine. Oh, I think we have some information today. Let's see what the GDP numbers were this morning. I forgot. 2.5%. Not bad on quarter over quarter. Somebody said 2 million off the hip, about 400K. The blunt talk's my favorite. You're bringing popcorn next time. That's funny. 2 million, yeah, close to 3 million at this point. Yeah. Off the hip, yeah, from money from my own pocket. And for as a trader, as chemical engineer, that ain't chemical engineering money right there, boys. S&P, same boat. Hold on, let me get here. Tell your buddy at whatever day trading that I challenge him one-on-one to a trading contest. We'll start with pick a number, 20K. Loser pays the winner the remaining balance of the account at the end of a month. and then we donate all the money to charity. Nobody's ever taken me up on the challenge like that. And I always tell people, and to enter a challenge like that, you give me 3 years of your broker statements, and I'd love to see that someone's a real trader, and I'll take them up all day long. Actually, if he shows me 3 years of broker statements, I'll raise it to 50K. I love trading contests. They're fun. If the resilience is low, is it a bull trap setup? It's likely a bull trap setup. Unless resilience pops above, then that's the case. So let's look at SPY monthly map really quick. Well, no, dude. Back to seeing over time, you'll find out the liquidity maps are probably the most accurate thing as far as finding pivots in the market. Nasdaq resilience is negative. S&P resilience is negative. The S&P has resistance as early as next week, still forming there. Even though the greater market is bullish, you'll see this. The greater bear market is squeezy. I don't think that it's going to easily be able to move like this. Typically, when you sell off like that, it moseys its way back down to some degree. And the question is, how's the degree before it ends up going? But we're going to 10,000 by the end of next 2 years in the S&P. Somebody said, look at the pickup sticks. I don't know. Usually small YouTubers like to come into our thing and plug their channel. Thanks, Annie. Wait, David, where'd you post it at? Oh, did you message me? Oh God. Here you go, guys. Not to make fun, but here's the here's the Here you go, guys. Everyone, y'all need to just stop watching our show. This is right here. This is right here. This is the new paradigm in trading. The bear short down, you discussed taking a long and hedge pusher break. Can you expand on the longs within the bear market conditions? I was thinking about lower confluence, but it didn't sound that way. Because the market tries every attempt it can to be bullish. In most probabilistic scenarios over time, the market's bullish. So I take every attempt I can to be bullish. So guys, this is the guy. There's the guy came on YouTube and was like, "This is the best day trader with the biggest community on YouTube." If I don't know, do you guys like spaghetti? David, that's hilarious. Yeah, anyways, there you go, guys. This is there right here. There's so many lines on that chart. Scarface would be jealous. That's a cocaine joke. Anyways, was that the opening scene to Empire Strikes Back? Where they're all fighting laser battles outside in outer space? Jesus Christ. Well, good luck to your friend, man. Let him know in a couple years when that doesn't work to give liquidity maps a try. We'll teach him how to trade. Oh, dear God. That was entertaining. Okay, so we're still pushing higher. You're like the new music god. Andy, you give me too much credit in the music. This is a Zoom, can you guys hear the music or no? I'm trying to make it to where Zoom is just like purely trading stuff. I feel I'm not gonna make fun of newbie traders. because we've all been there. Everyone's got to discover their way. So I feel bad making fun of that guy. But people like to come in here and just talk some mess and plug their stuff. The image. Okay. Yeah, it really is. It's perfect to put your stuff in our half gap. While this is outside of DD bands and quite random, I was gonna take the long here, but I just kind of decided against it. You guys can hear the music in Zoom. Okay, cool. So somebody said with yesterday's education, by the way, we have new liquidity map diagram. This right here, this is going to be published again in the Zoom call channel. We'd appreciate you guys to support that. The actual probabilities being written on these arrows under different conditions of the market, plus how much I usually trade on them. Very important. Just as education, the BRSD, which is the setup that goes to the downside. You discussed taking the long on hedge pressure break. Yes. Can you expand on longs within the bear market conditions? I think it'd be lower confluence, but didn't sound that way. So the question becomes, how many times, how many candles in a bear market are green on the daily and how many are red on the daily? John, question. Somebody said that risk interval trick you showed a couple days ago is magic for pivot point. Sharp moves terminate right at the risk interval for at least a bounce. It does almost every time. Sharp moves, especially like when an event or a catalyst comes out, right? Can you buy an option with $100 and nothing else in the account? I'm sure you can, H. Patel. Options are, I mean, 0-day options themselves cost hundreds of bucks, give or take or less. It's going to be hard for you to get one options contract for $100 though, but certainly you can get one 0-day for about $100 or less. Like I'm looking right now at like, again, that, but you don't want to trade all your entire account. So you're kind of right at the cusp. An example, let me just look at QQQ right now. 475 at the money calls, $230 per contract per 100 shares. You're right on the edge. So as far as like with $100, you're going to be a little stretched for cash trying to trade options with it. The best thing you can do for trading $100 is to trade nano futures. If you didn't not know that was a thing. Nano futures are the most affordable thing for day traders to trade. Think of micros being a fraction of a mini. A nano is a fraction of a micro. So nano futures are designed for you to trade. I think if the E-mini is $500 intraday margin and the micro is $50, I think the nano is $5 to trade. You can buy a few with $1,000. Well, again, it depends on what you're looking to buy. I'm just looking at the average price right now of at the money calls for 0-day, because 0-day will be cheaper than anything that has a couple days on it to expire. The most expensive kind of at the money is going to run you close to about $200 an option for right here. If you're betting on big moves where you can buy cheaper out of the money, like if you're betting on, I don't know, 470 retracement today on Qs, 470 0-day puts will cost you $40 for one. And if that run takes off, it's 500% if it just sharply goes there. But you're basically throwing all your marbles into one trade, right? And again, not investment advice for you. It's just with $100 you can't maneuver much. 1,000, maybe a little bit more. But still, you're still kind of like, if you want to trade any moderate options trade between now and like 3 to 5 days of expiration, You probably need closer to 10 grand in the account, so that you're not taking adequate or overly amounts of risk. Because, you know, just options that expire even tomorrow. If you're looking for 10 or 20 point, it's like, maybe like 2 to 4 points of correction on SPY from here, 476, 478 for like next Friday or Thursday, I guess, the 6th. 478 puts are $616 a piece. I'm doing that right? Yeah. So to give yourself a week out, so you're not trading like 0-day options that like either expire worthless or expire with money. To give yourself like a week or so, you're already bumping in 1,000. So if you're looking to day trade options, like scalp options, like lose it all if you lose, $1,000 is like the bare minimum, and you're not going to last long. I usually tell people, you want to day trade options, you need about 10 grand at minimum to safely be able to like not lose 50-60% of your account on one trade. Because $600 for a near the money put for like 2 Fridays from now, which is a normal swing trade, costs you $600 already. So you're like, options are gonna be a little pricey. Yo, what's up? Mr. OG still in here plugging his awesome Discord. Let me tell you something about views on YouTube. I can put a short on YouTube and boost it with $1,000 and get 500 to 1,000 subs for $1,000. It's about $1 a sub on YouTube, just using YouTube's own advertising mechanism. So if I put $1,000 a week into a channel, just boosting my own shorts, I can get hundreds of thousands of views and thousands of subscribers a week with moderate amounts of cash. So the size of somebody's subscription count on YouTube is nonsensical. I don't usually use that as a gauge of how talented they are. I usually take the number 100 and I divide it by the number of lines they have on their stock chart. And then I give them a score between 0 and 100, and your homeboy's at negative right now because I counted 600 and something fucking lines, and I just wouldn't care how many subs they had. They probably have 1 line on their chart per sub they have in their channel. At the end of the day, if I wanted to vomit, I'd go out there, and there's easier ways to vomit, but this one's pretty easy. So I don't know. Stop plugging your buddy. Here, I'll give you one more stat.
Just another scar placed on my heart, a sign that we are made to be apart. And even though you might not be the one, I'm gonna miss you daily. We fought so hard, we dragged us down, and basically watched how we had drowned. And even though I know you're not the one,
Here, let me show you something cool. I'll give you one more stat. This is from my Stripe. And this is just from, I don't know, Rocket Scooters days. It's not counting the DTP days, but there's a number for you, bro. Nobody's buying views here. I literally have 5,500 paid customers, and that's since... When did we launch the platform? 2022? That's from Rocket Scooter Stripe. So I've got 2 subscribers for every paying customer. So that's pretty much it. So we have roughly 6,000 paid subscribers in the community. That's, you know, Stripe is a thing that takes payment, right? Bro, you ain't gonna win this, man. There's a reason everybody's joined Rocket Scooter and hanging out. Nah, the guy's just plugging his own YouTube channel for subs. Let him do it. We do run Finance's biggest marketplace for vendors and traders. So, you know, we do support small businesses and try to get them off the ground. So it's weird that Al being here plugging his own stuff. We can actually help him get big instead of just like YouTube big, but like actual big. I mean, it's cool to run a trade room that makes 7 figures a year. That's kind of fun. I don't care if you have 30,000 views on a YouTube channel or subscribers. You know how much those videos make? Probably about maybe 5,000 views on a video. It's gonna roughly make about let's see, no, $5 for every 500, so 10 bucks for 1,000. If you have 5,000 views, you probably make $50 a video. That's kind of cool. You're not knocking it. For 5,000 views a video, you probably make $50 bucks a day. That YouTube channel, I'm very proud. That's a good. Yeah, so that's like 6,000 paying clients since 2022. That's in 2 years. It's like 3,000 people a year. That's not bad. Bro. Discord is exactly the same amount. It's like literally exactly the same amount. Bro, like if you want your stuff to go big, just give us a holler. We'll help you. Our marketplace is loaded up with really good traders and really good customers. Our marketplace actually just passed, I think, like 1,300 active users, and we launched it a few months ago, July. The marketplace, we help people find trading customers. The risk interval trick I love. It's Patreon, Discord. What are you talking about? There's no Patreon. I don't use Patreon. Okay, I'm gonna just block this weirdo. Anyways, guys, if you want a lesson on Italian food and how to make spaghetti, go ahead and watch this Spy Day Trading YouTube channel. I'll give him a shout out, whoever it is. Honestly, good luck. I'm gonna put this guy on timeout so he can sit in the corner with his nose against the wall and think about what he did for interrupting chat. You're in punishment, sir. Think about what you did. Say your rosary. I'm gonna put your time out. Here we go. So my particular trades right now are looking for, like I said, bull trap possible, so be very careful. That's why I'm not in the long anymore. I'm serious, guys. Being a YouTuber, I'll tell you what's great. Your video gets 1,000 views. YouTube ad revenue is like, here's your $8. Thank you for your participation in the YouTube community. Like, you don't really make a lot of money just being on YouTube, unfortunately. So because of that, I turn ads off. That way you guys don't have to be annoyed so I can make $8. It's how it is. Like if you're big, like I think Trades by Matt, probably he has the volume that makes probably 50 to 100 bucks a stream, which is probably decent money. So I don't know if he does ads or not, but even so, like the moderate size we get as traders, you know, traders that have like millions of views per video, being on YouTube doesn't pay the bills. You want to pay when you want to trade futures 1,000 instead of going the eval route. That's a little more affordable than options. Because the futures you can trade much smaller. Micros will cost you 50 bucks a contract. And every 10 points on the S&P will move you up and down 50 bucks. So 50 bucks being 5% of a $1,000 account, one micro, you're up and down 5% a day. Or 5% a trade. Which is a lot more tolerable than losing 50 or 60% to an options trade, Patel. So, by the way, we most of our paying clients are in Zoom. So if you guys are in the YouTube, most 100 and something, 160 people I think signed up in the last 3 days. We offered this new Zoom call thing. Make sure you go to the Discord, check it out, because we're doing this brand new thing where we're basically migrating everybody to Zoom. It's real time without a delay. So we're trying to get to our goal of 300. So if you guys can support that, we're trying to build a few more tools on the platform. We're going to take our liquidity maps. We're going to put the actual percentages on here. And there's also a guide at which how much I usually trade at each one of them. Hedge pressure, bounce, hedge pressure, break. I trade different amounts in each time. And so the new liquidity map diagram that I'm making is going to have the actual size of positions I do. Each one of these I trade a little differently. There's contingencies on each one. So we're building out something really new. We ask you guys support that as we drive this. There's a new thing. It's going to be here. Trust me when I say you will love what we're going to build on the platform. Right here. We're going to hire 2 new developers to come in to build this out. $1 a day if you sign up for that. It's a Zoom call every afternoon. We do training. The people that have been here have been like fanatically loving it. It's completely different from what we've ever done before. I actually show like my trading style more so than just teaching the liquidity maps and how it works. We actually show my trading style, how I use it, how much I bet, when I stop. Yesterday was very specific. We went over every single liquidity map. And if you guys have never seen this happen, this is where you're going to go do it. Just sign up for a month and get the stuff at least. Support us for 1 month. Each one of these legs has a number written next to it, or a letter written next to it that corresponds to how much I trade. Heavy, medium, normal, based on different conditions. And do I take the break? Which ones I don't ever trade? Which ones I always trade? Which ones I chase? Which ones I sit out? So it's a very comprehensive guide for that. And we'd love for you guys to support it. That'll come with your sign up. So there's the link in chat if you guys can do it. You can find the Zoom link in Discord. So if you signed up, when you sign up for that, click claim on your dashboard, and then you'll get the sign up stuff. So so whether lifetime or not, the Zoom is kind of a new thing that we're doing for even lifetimers. We're asking, it's like a donation drive basically. We're asking for some everybody to donate $20 additional a month so we can staff up 2 new developers. Which roughly costs about $3,000 a month. So 300 people at 20 is $6,000 to pay for that. So even the lifers, we're asking if you guys want us to develop stuff faster. We're doing like a Kickstarter in a way. If you guys support that sign up, even as lifers, we're gonna do like this extra content for everybody. Just so we can hire more developers for the platform. So the idea is that, you know, we don't go out there and get venture capital money all this time. We just kind of kill what we eat. So you guys want a lot more features. We just don't have the capacity to develop it because we're building the marketplace. So we're asking that folks sign up. There's a link I put in there. This is content from me as Matt. It's aside from Rocket Scooter. So imagine like Rocket Scooter has all the tools and liquidity maps on in there. Now it's like me, Matt, as a trader doing coaching and how do I interpret Rocket Scooter myself? How I trade with liquidity maps, which ones I use, which ones I don't use. So it's kind of like me creating a service. And all proceeds will be donated back to the company. So if you don't mind, we'd love for you to support us. So OG guy in YouTube joined July 23rd, 2024. Pokey Degree Celsius joined May 16, 2024. How many different fake accounts do you have, man? You already have our moderator. Our mods are like, okay, let me hide this guy too. Burner accounts. Yikes. All right, what do we got? 30th, August 30th. Am I looking for 4? I'm still. So somebody just asked me a pretty cool question, and this is really helpful when you talk about like liquidity pockets, right? And somebody was asking me, what is the mechanism that causes liquidity pockets to bounce there and there, right? And kind of like let's talk about like the mean reverting setup, and I'll talk about this one really quickly. So liquidity pocket is a form. You'll notice this is that on liquidity pockets. Let me just find a good one. You have bull zone here. You have bear zone here. In the bull zone, you have traders trading against the house, like basically where they were buying when there were no sellers. And in bear zone, you have sellers when there was no buyers. So all the bears are mostly parked down here and all the bulls are mostly parked up here. So the neat thing about the middle is that most of the bulls are losing their trades. They're upside down. And most of the bears are upside down. So the dealers or liquidity providers are the ones who are profiting in the middle, right? The bulls longed against the market maker who shorted, okay? Bears shorted against the market maker who longed. So in the middle, the short is making money. All the shorts are making money and all the longs are making money. So dealers tend to be nice and pretty sitting in the middle of the house, right? Why do we pivot inside of here? Well, there's a lot of things that happen. So especially like at this boundary, once you start having puts go in the money, your gamma is going to go really high and you're going to have a lot of dealers rushing into short as that change in gamma takes place. So you can have some preventative mechanisms. Shorts cover. There's high volume flow at each one of these areas because this is like a high gamma. So high gamma just basically means high order flow. The rapid change in delta hedging means more order flow comes in per change in price. So right here, you're just going to see a surge of volume. And a lot of times that volume is designed to combat these puts going in the money. As long as there's not abnormal amounts of selling pressures, dealers will buffer all that selling. They'll just stuff the bid and buy everything people are selling to keep those puts they sold from going in the money. And vice versa here. So dealers tend to like drive the market to liquidity because buyers are here and sellers are here. This is the closest place to match buyers and sellers with each other. So as market makers are pricing the market fairly to match buyers or sellers, then it makes sense that they're going to price the market here in the middle. So they'll put a bid here and an ask here, if that makes any sense, to keep the market between where the proven buyers and proven sellers are. So there's a natural order flow just from the pricing of the market. All right, I'll be right back. I have to take a quickie bathroom break, and I'll be back.
are leading us, and love is all we'll ever trust. Yeah, no, I don't wanna waste what's left. And on we'll go, through the wastelands, through the highways, till my shadow turns to sun rays. And on we'll go, through the wastelands, through the highways, and on we'll go. Finding life along the way, melodies we haven't played. No, I don't want no rest. Echoing around these walls, fighting to create a song. I don't wanna miss a beat. And on we'll go, through the wastelands, through the highways, till my shadow turns to sun rays. And on we'll go, through the wastelands, through the highways, and on we'll go. And we'll grow in number, fueled by them to see the horizon, turn us to thousands. And we'll grow in number, fueled by them to see the horizon, turn us to thousands. And on we'll go, through the wastelands, through the highways, till my shadow turns to sun rays. And on we'll go, through the wastelands, through the highways, and on we'll go.
I'm back. What do we have here? Yeah, we really appreciate you guys supporting the new Zoom calls and the new all the new content we're trying to put out, and of course automating a lot of the things that we're trying to do here. It really means a lot. So pretty soon we're gonna be, just letting you know, pretty soon we're gonna be fully on Zoom. Let me see what we have here on futures. Let me load up. Just drifting up higher. Outside of DD bands, I usually don't like to trade much. That's kind of like why I'm not doing much. I did initially take a long, but I didn't close out because it wasn't something I was really interested in fighting all day. S&P pushing pretty heavily, breaking that yellow. So I did initially take the long side, but it was just kind of like jolting around a little bit, so I just kind of closed out. But it would have been a winning trade had I stuck with it. Trading small, and like I said, I think I was down like 200 bucks or something, nothing crazy. 200-300 bucks. QQQ busts and really quick. Really heavily above ED. That negative resilience is still having me worried that the market's probably gonna fight here. I don't know. This is kind of bull trappy, and I don't like positions like this. I don't really like to be long, and that's kind of why I bailed on the long. Typically, you can get a little run like this. We had decent GDP numbers that came out. That's likely why, but I don't think we get momentum from here. That's the thing. The stocks aren't really agreeing with what the index is doing. There's a little bit of just kind of like a little bit of caution I'm having here. Continuing jobless claims, initial jobless claims. Let's talk about those today. We had wholesale inventories came out, and GDP, which is always big. We'll do the price index. Just look at sales. These are also interesting. Corporate profits. Firstly, continuing jobless claims are still, it's still technically trending higher. People are having a hard time getting their jobs back now. You're competing a lot with like AI and work from home and high salaries. A lot of reasons why people that are continuing to file for unemployment are like unable to get jobs. So that's a little interesting that it's not coming down. It means the market's not going through a massive hiring spree right now. But it's also not going through large amounts of layoffs either. You know, 220,000 is pretty normal for first-time unemployment filers. So that's pretty at par. GDP quarter-over-quarter growth came in at 3% on a 2.8 forecast, which is good. Anytime your GDP quarter-over-quarter growth is positive, you tend to be in a growing economy, and that's pretty good, right? When you hire somebody, it takes like 3 to 6 months for them to become efficient at their job and basically contribute their salary to a return on investment of the employer, basically to increase GDP or increase the production of the company and make the company money. So we're not being in a hiring spree, GDP going up without being in a hiring spree, it means existing employment is successful and people are becoming more efficient at their jobs. That's how you analyze that. Companies are doing great without the need to hire new people, basically. This is the change in price of all goods and services included in the GDP product itself. I said that the gross domestic product itself. It's an inflationary indicator as well, which has been coming down since 2022, which is good. Oh, that was that guy. All right, so decent data here. Problem is that the stocks themselves are looking very gap filly, which I don't like. Not that I'm looking to short the market today, but it's always really, anytime you're trading above the redistribution zone and resilience is negative, I'm always cautionarily bullish. I still want to be bullish, but either the stocks can rapidly catch up or the S&P could rapidly fill the gap. So a lot of the time when this resilience number is negative, the market can literally like do this all day and just float and then randomly it can do this. And because it can randomly do that, I don't like to just sit in the long to catch a couple pennies. I mean, the market's drifted up and down 10 to 20 points in waves. So because the gap fill potential is so high, I don't take the risk on the long side. Now the S&P has a path to fill its gap, of course. To me, I can go for 30 more points on the long side with one contract. What should I do? Which is a $1,500 potential up to still also lose, you know, $1,000 to $2,000 on the way down. Now we know that green candles, typically strong green candles close strong and green. They don't really reverse. So today, even if there's a dip down here to fill the gap, it likely survives. So what I normally will do is I'll wait, and hedge pressure bounce I'll always take with a long trade in futures, but I just wasn't today. I'm not feeling it because it's outside of DD bands. A lot of times outside of DD bands, I'll just normally not do much. Definitely time to scoop those puts you were shopping for. Oh, between now and the next 2 or 3 days, yeah, I'm gonna be scooping up some puts. I might do a couple of day trades, like 1 to 2 day expiration, and then I might do 2 weeks out for just retracement to yesterday's lows. At least on Qs. Yesterday's lows retracement is pretty common for what I'm looking for. So I could do 2 expiring Fridays from now. For Qs to go up and then come back down. Essentially to fill this gap. Not that it'll happen today, but maybe like in a week or two. So whatever Qs end up doing, even if they end up going up there, I'd be very interested in that target right there. So at whatever high I get to, I'd be wanting to buy at least retracement there, so that it can actually have a wave down that's closer to that area. And I'd like to pass right through the money and then capture that delta and probably sell as it's falling. So we'll see. I'm not going to really bet the farm like all in long on some kind of trade like that, but I'll take small stabs at it. I don't like to short a bear market, but I can also long futures to hedge. So like basically I can buy options to hedge my futures trades. I can just scalp futures to the long side as it continues to creep up, and then just grab some weekly options just in case the market does temporarily have moments of volatility. I just don't like the resilience is not getting any move here. The S&P just keeps pulling back. You'll see that. Not the best. And then monthly maps. I mean, it's very clear that in the next 2 or 3 days we've got some bear zone resistance. It's still sitting there through October. And Barkey was talking about this in chat too. Like a lot of our folks are very keen on understanding where the market can freely move and the market's gonna have a hard time moving. As you know, bear zone above bull zone is illiquidity pockets. So you can think of it the other way around. When the bull zone is above bear zone, you have liquidity. Let me get a different color. Inside of these ranges here. I'll just draw it with like a white color. Like the daily range is much smaller, the market's liquid. But whenever you get illiquidity pockets, you use it's the top of the bear zone, bottom of bull. Well, when they're inverted, the top of the bear zone, bottom of bull becomes much bigger. QQQ's got volatility. Big volatility sitting here next week. Y'all see that? Look how much possible volatility Q has. So the daily range in Qs can get much, much, much wider next week. Doesn't mean it's going to sell off. But today being like very bull trappy, I would be very cautious because the potential range is much wider. So it doesn't mean it's going to sell, but it means if it does sell, look how much just how much after this week that the daily range gets extremely wide. Y'all see that? So with additional bear zone resistance, which I'm drawing right here. And I'll just kind of like, I won't color in all of this, but you can kind of see that liquidity, right? Actually, let's just kind of like make this a little smaller. So in like the next couple of days, market's pretty liquid and stable. So, you know, we might get that kind of like slight little kind of bullish tint to it. But man, starting next week, volatility's likely to come back unless this dissipates. Y'all see that? So this is like why a lot of us are thinking that this upward movement has a second leg down. And this is all monthly maps. So the idea that you can have additional volatility and that VIX is on the cusp of that triple B, this is leg down. This is leg down territory. VIX is just right here. So whether SPY fills the gap today or not, we don't know. But in the next week or two, maybe like tomorrow's expiration, if we're back above here, then we got a week or two of selling. And that's kind of what's presenting itself right now. And be very, very, very careful trading. Doesn't mean that this is going to sell off today or any day, tomorrow, anything like this. But the idea that you get more volatility coming in the next week or two is just essentially volatility being the active daily trading range. We always talk about the risk intervals. And let's show you what on the S&Ps, sorry, Nasdaqs. And that's where I'm thinking the volatility is going to come from. Tech stocks. 144 and a quarter. So I'm going to go to Nasdaq. Where did my platform go? I'm going to do 144 and a quarter. That's the wrong one. Come on. There's the yellow line on Nasdaq right now. And we're going to do a box. Of 144 and a quarter. 144. So I'll teach you guys a cool trick. We talk about the wait, where did I put that? Oh, maybe we should draw that not so. Wait, what was it? 144 and a quarter. Oops. So I'm making a box of that 144 and a quarter distance, right? You can see that any big pivots on Nasdaq or any other pivots, like when you have events, tend to move that risk interval distance, right? Now when markets become volatile, see how that Nasdaq, there's the distance there. right? When we teach you guys the risk interval trick, you'll see that all major moves tend to kind of float that distance. Nasdaq overshoots a little bit when the volatility is higher. But the average range of like oscillating market, this is the average volatility for the most part, the average size of the Vs. And so here's your Vs on Nasdaq. You see that right there?
Chance, babe, and you were supposed to be my balance, but you preferred to make me bleed or less than.
So what happens is whenever you start to get that volatility being possible, you can go like 2 risk interval moves and 3 risk interval moves, and that volatility is there. So let's just kind of like show you a cool little trick before I get out of here. I'm going to make a box of double the size. And in periods of volatility, you'll see that. I'm just gonna go back further. The daily. You see how when Nasdaq's selling off, right? So you get like 2 and 3 risk interval selling periods. Oops, let me. Why does it keep? You guys can see it, right? So like this is 2 risk intervals, and you can see that when you're selling off and the market's volatile, it's like oscillating within 2 risk intervals. The big ups and the big downs are really big. So you see how now this is 2 risk intervals, and a lot of times the daily range gets much bigger when that volatility is present. So like anytime the market falls and then recovers a little bit and starts bouncing around, you get sometimes 2 RI moves. See here, there's one there, there's one there. And you get the range is much wider. So that volatility being present as monthly maps are showing means you can start getting some pretty gnarly days in Nasdaq. And sometimes it can top the market over. But even the bull side, you see how the big ups and downs are at least 2, sometimes 3 risk intervals. So the market can become very unstable when volatility is present and when illiquidity is present in the monthly map. Okay, so the idea that the daily range can get bigger, these are like 2, 3, 4 risk interval moves you can see. Just be very, 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 very careful. So the bull ups, it's a bull trap to me. And I think Barkey was talking about it too, one of our members. I think we're very bull trappy right now, and honestly, I'm not really too eagerly gonna like go in there and bet on the long side from here. I told you yesterday I was shopping for short-term puts. I'm looking for 468 puts on Nasdaq. I waited for today to look at them. I'm looking for a decent price as you have low volatile days like this where the premium is just in complete decay. I'm starting to buy. I just bought a little bit ago, and I bought at the first peak at 10 o'clock. So I got 468 puts on Qs. I'm taking. This is a medium-sized trade. I'm not putting too much into it. But just to day trade it. So I don't think we're gonna get big market collapses, but we'll see. On days like this, I scoop them up dirt cheap. And whether I'm right, I'm right. Whether I'm wrong. But the resilience being negative and the market flying higher, it tells me I got to make a day or two of this kind of like bull trappiness where it might likely sell off. Now, I'm not betting that the market reverses. There's a very high probability that volatility is there. And volatility increases your premium anyways. Putting call size, the IV goes up. When we start getting some selling, that volatility shoots up. cheap puts will make a whole lot of return on the little investment. Put a couple grand in some cheap puts can turn it into 10. The market suddenly decides to sell off into next week's Friday expiration. We'll see. What about SPY? Can I show you guys that? Oh, as Archie said, scooping up those puts. Yeah. I say when I know the market's going to pivot pretty predictably, but it's hard to day trade it. Like, you know, you're irrational a lot of the days. A lot of times swing options are a really good way to go to bet. Now, again, I can be completely wrong about the market, but SPY has kind of a similar approach as you see. Now, even though the bear side is really small, it's still here. You guys can see, right? So SPY has liquidity, practically like no volatility the next day or two. But the following week, there's illiquidity. The market has potential for high volatility. Doesn't mean that the market can dip that far. It means the range can get bigger. So while typically in liquid markets, you have 1 RI moves for the most part on catalyst type days. And we'll talk about this one today in the Zoom call. When you have illiquid markets, it can be many multiples. We'll call them volatile markets. Or IP, illiquidity pocket, or volatility pocket, whatever you want to call it. LP. You typically have 1 RI moves as the market goes against you. Illiquid, oh god, you can have 2. I hate when that fucking happens. Or we really need to fix that memory leak. Yeah, that's one of the things we're gonna fix as well. You guys support the Zoom calls. We need to hire more developers for the platform side of things. So support the Zoom call because that's one of the top priority items is that memory leak, and we have in some of these browser setups. Okay, so 2 RI plus. I mean, we've seen like Nasdaq, we've seen days where it moves like 4 to 10. I mean, it gets pretty crazy. So in liquid markets, it's very rare that you have a catalyst that drops like more than 1 risk interval before it at least tries to bounce, and then it'll sell. You get that 1 risk interval drop. But in illiquid days, you get the market can just sell. Like Nasdaq can move like 3 or 4 risk intervals before it even, like it might just like hit that RI and then keep going without the bounce. And we've seen 3, 4, 5, 6 RIs, and even in the last month. So you got to be very careful when illiquidity pockets, what we call them, or volatility pockets, are present. You have to be very careful and take note that the range can expand. So if you're looking to be a bull, just know that, well, do I want to be risk on really heavily to inch up, or do I want to wait and let the market possibly sell and then hit it hard right down there? So like the S&P, right, 530 as a base, not a terrible place to take a look at, right? So if I were to long and buy calls, what I'm saying is like the minute the market gets like down in this area right here in the next week or two, I'm buying my calls for the breakout or to the tap if we don't fill the gap. So if the gap doesn't fill right now and it starts selling in here, right here, I'll buy 2-month out calls to fill the gap. And that'll be my big option trade to the upside, which I like to see. All right. But we'll see how it plays out. Like I said, this is a nice, strong bull day. But the negative resilience is just like very bull trappy. I don't like to be super risk on when resilience is arguing against the daily move. Where's my wallet? I need a new mouse. Mine's starting to get all crazy. I also need a new keyboard. What am I buying here? Sent delivered. What did I order? I need to get a new keyboard. It's starting to fall apart. All right. I think I get the what switches do I get? Yellow. Let me see the back of my keyboard tells me. I always forget which color switches I get. Color is yellow. Okay, look at serial number. 20. I need to order a new keyboard. Mine's falling apart. These are yellow. Razor always changes their colors in their key switches. Linear and silent. That's what I want, linear. Tactile and clicky. I don't want clicky. I don't want green. Light and clicky. I want that. Orange is too forceful. Alright, we'll do yellow. Yellow switches. Okay, good. What is short term for me? 2 weeks for options. I don't. If I'm doing a swing trade, I only usually get usually I round to the nearest 2 Fridays. If it's the last week of the month, I usually will trade 1 week out. Like that particular ones. So you guys remember from the Zoom call we talked about the last week of the month and all that. If I'm trading the last week of the trading month, not the options month, but the trading month, and I'm buying calls, I'll do very short term if I'm swinging, just to get them cheap. My golden apple trade, yes sir. How to earn stops on my options plays? If I'm day trading, it's all or nothing. So they either make the money or they go to zero. An example: if I have 100K in the account and I want to make a $10,000 trade off of a $5,000 investment, which is a 2-to-1. Then I'll buy $5,000 worth of options and I'll ride them till they expire or ride them until I get in. I don't usually stop on an options trade as a day trade because an option is trying to hit your target at a certain point in time. So I limit the risk by just stopping at a dollar amount. So instead of like, I don't put in a majority of the money in the account. Does that make sense? So when you're day trading and you say like, I'm going to stop at 3% of my account, for every 100 grand, that's 3,000 of loss. Well, in options, 3,000 of loss is just buying 3,000 of options that don't play out. So there's 3,000 of loss. You fix your stop by the amount that you buy, and that's your stop. Does that make sense, Denny? I've always traded options that way. All or nothing. So I commit. So like if I'm going to buy $1,000 worth of puts to try to make 5,000 out of it on a reversal, I just buy $1,000 worth of puts. They play out, they don't play out. Either case, I'm not gonna stop out on them. You follow? Because your loss is already fixed with an options play, so you can just fixate your loss just like that. With the S&P, I fixate loss by losing a percent of my account the same way. Options very similar. All right, you guys, everyone on YouTube, we're gonna get out of here in just a little bit. I gotta run. Love you guys. That resilience is still not moving on the bull side here. So when you try, the reason I don't use stop losses on options, not because I'm an idiot, but because options positions are really hard to fill, especially if they're out of the money, they're illiquid. You really get punished for closing you get punished for closing and opening options positions. Like an example, let's just pull one of the so I don't like to just I plan to fix my loss by losing the whole option. I mean, that's basically how I do it. So we get an example here. Why is this like, okay. So an example, if I was buying, I don't know, let me just pull a number out of my butt here. If I wanted to buy let's see, was trading at 476 Qs. If I wanted to buy like 1 week out, I'm gonna pick September 11th. And I want to buy calls for, I don't know, 476. Let's do 478. Like I wanted, or 477. I want to day trade to the next at the money strike. The bid and ask difference is $684 versus $704. Just to close that position to the ask, it's 20 bucks on 600. That's a 3% loss already. Do the math. 20 bucks of difference, 20 bucks of spread between the bid and the ask. Just to exit the position. So like, I don't day trade options in a way I would day trade something liquid, because like futures, I can just get in and out and lose a tick with the market stop. But to get out of an options trade costs you money, even when you take profit. You're gonna lose a hit. You're gonna take a hit, especially if you're in the money. You're gonna lose, you know, 1, 3, 5 to 10% sometimes your option just trying to stop out. So you've already lost a certain amount. You try to step out, you're gonna lose a little bit more. I decided to avoid the exit mechanic that basically loses even more, to just trade options smaller and then all or nothing on them. So I could plan a 2 or 3 to 1 trade here. Like an example, if I buy 468 puts on Nasdaq just to retrace yesterday's low for a week out, if I put $2,000 into it and we retrace within a week, that $2,000 will probably make $10,000 to $15,000 because they're such short term. I could get 500 to 1,000 buying them dirt cheap today at today's highs, and if it retraces, it goes. If it doesn't, I lose $2,000, and then I just lose $2,000. So my stop loss is $2,000. It's fixed. I can't lose any more than that. So if you guys keep that in mind when you're trading options, mechanically, I designed it that way to make it easier for myself. So a lot of people that are day trading options and putting like 10, 20, 50% of their account in the options trade, yeah, you better use a stop loss to get out of the way because you shouldn't be betting so big. But I treat options like a fixed loss instrument that they are. They already come pre-built with the stop loss. They stop at the total amount you put in. And that's the best part about options. If you just buy puts or buy calls, they come pre-built with stop loss. They stop at the amount you spent, which is great. You can't ever go negative, which is great. Does everybody follow? Does that make sense? That's what I love about day trading options. Removes one whole step from your diet of having to put a stop loss anywhere. Your stop is fixed at whatever amount you choose to lose. And so I don't ever go in, and unless I'm really, 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 really betting hard to put in a huge portion of the account into a single trade. You guys follow? Like, I've already bought I've been buying 468 puts in Nasdaq all morning. Each time we've tapped 478, they've gotten cheaper and cheaper and cheaper. So I like what I'm seeing. Market's starting to pull back a little bit. I do like this. Again, I don't trust the bull trap. So obviously, like, I'm not expecting it to day trade today. Or the day trade to like go much lower today. But I do expect, you know, the idea that the resilience is not giving us any love, that this is very bull trappy. So we'll see. I miss trading options. That's really fun. It's a little challenging, but it's fun. One of my favorite things to do is trading options. It's challenging. I do have a system, and maybe I'll do, for you Zoom call folks, I'll do a special options trading month. Maybe month 2. After we get through the 20 days course, we'll do month 2. I'll just go over some options stuff. If you guys are cool with that. For whatever reason, your brain just dies in futures. Oh, I need to order my... My mouse keeps catching. I need a new mouse. All my stuff is just... It's time for new stuff. Time for new stuff. Last time I ordered a new keyboard, I'm looking 2019, a new mouse 2019. I use this mouse right here with the hotkeys on the side. This is from my old gaming days, MMO days, and I still use it to this day. And I love having all my hotkeys programmed to do all kind of random stuff. I simplify my life very greatly having hotkeys. No lie there. So I need a new mouse. It's starting to yell. It's starting to catch on something, and I can't figure out what it is. Okay, guys, I'm out of here. Love y'all. Outside DD bands, no futures trades today. I took a quickie long out the door, which I saw, but then I scared myself out of it because resilience was negative. Right here, it started doing this and I just closed out. The market's not going anywhere besides when I close out. A couple $100 I lost, no big deal. But I have been buying QQQ puts right here at the top for 468. I'll explain my rationale in today's Zoom call, so don't forget to sign up for that. We're doing a brand new Zoom call thing for our group every day, 2 p.m. last hour of the day, 2 p.m. my time, so 3 p.m. Eastern. Zoom call is recorded. We're going through an all-new webinar series that's unrelated to anything you guys have ever seen in Rocket Scooter so far. The last 3 sessions have been fire. It's all about the probability statistics, why I make the trades I do, why I'm waiting to take options trades now, why every couple of years I make big bets on the market, how I make my real money, the probabilities to which liquidity maps play out. The amount at which I trade on each leg of those is the most important one. Yesterday, I went through and I drew letters on each one of these, like small, medium, and normal. And each one of these had, I'm just going to put some random ones. These aren't it. I bet small, medium, or normal, which is the yellow, green, and red lights that we have in our alerts here. And then I rationalize 1A. I'll say 1A, I'll take small if A, B, and C is true. I'll take medium if A, B, and C is true, and we're looking at all the other indicators. So we're making the liquidity map diagram much more robust. And as a thank you for those of you that are supporting the further drive of Rocket Scooter hiring more developers, we will reward you with that all-new liquidity map with the cheat sheet written on top of it as well. So thank you. Like I said, $20. Support the group, and you can buy that all that new content from us. And we'll hire 2 new guys, and then we'll actually program that stuff into liquidity maps for you. That's what I'm excited to see. And, you know, with all the folks that have been supporting us over the years, once you want to see those probabilistic back tests on your charts, probability the gaps fill, probability the bull long ups hold, probability hedge pressure breaks, under all these conditions, we'll be using machine learning and AI to create an AI-based back test that will tell you those answers. And it'll say over the last 100 iterations of these combination of stats that the hedge pressure is broke 40% of the time or 80% of the time. And now you'll have a significantly higher power, higher amount of information to add power to your analysis of the market. So thank you for solving us. No, that mouse is not the Razer Naga. It's the Corsair version of the Naga, which I like the keys better. Corsair Scimitar. The Naga got too wide as the years went by. The old Naga Pro from like 2010, 2012, I love that one. But the new Naga is just so wide. You used to have like this detachable plate that you can pull off where your pinky is, but I have small hands. So I need a thinner mouse so I can wrap my hands all around it. Yeah. Corsair Scimitar, that's the mouse. It's their version of the Razer, and it's definitely much cheaper. And the keys feel much better, and where the thumb isn't as adjustable. And I'm ordering a Razer Black Widow Pro because that's the only keyboard I've ever used. It's great. Yellow keys. It's got a leather-ish wrist guard, which is amazing for... It's like a squishy wrist guard. It feels so good. Yeah. This is the one I get. I'll say pleather. It's amazing. Ergonomically, the best one ever. I'll see you later. Love you. Bye.